Good afternoon, everyone. It is so wonderful to see you. We're going to have more people who are rolling in as we get started, but at the IFA, we love to start our programs on time. So we wanted to make sure we got the conversation going, knowing that we will be able to welcome everybody in very easily as the conversation gets started. So, first, we're very excited to welcome all of you to a very important discussion, about breaking down barriers, financial readiness, and accessing capital, one of the biggest challenges that potential franchisees face in joining wonderful and existing brands, and for our brands as well who are interested in trying to support their franchise development and their recruits in through their system. So we wanted to have a robust conversation focusing on education and information that we can share as a convener in this space, trying to bring everybody together and solving these challenges and problems. We want to answer your questions, particularly those of you who are aspiring entrepreneurs and opportunity seekers who want to, believe me, take advantage of these opportunities and these wonderful people who are available to you to help you think about, ways to become successful franchise owners. That's why we're here. This is the second in a three-part educational series that we are putting together about how franchising is open for opportunity. In the first one, which many of you participated in, is just like the basics about franchising. Franchising 101, what's it all about? Why might it be a right fit for you? For those of you, if this is your first time joining us, we will make sure that you have access to that webinar as well, because I would encourage you to look at all of this content together. And in this one in particular, we're going to talk about piece number 2. How do you put the access to capital once you've decided that franchising is the right opportunity to you? Being a 3-part series, I also want to point out to everybody that on November 17th, we will be holding part 3. And that one is the third piece of the puzzle that so many of our audience members tell us that they want to talk about as well, which is, well, what does it take to be successful in franchising? And where we look at where it's maybe unique or different than independent business ownership, and bringing people together to share their journeys, their stories. Many people who started, like many of you, who were thinking about franchising and wanting to get into it. So bringing that brain trust together to share their insights about what it takes to be successful. We're also going to be recording this session and that one. So all of this is available for on-demand content and sharing. We encourage you to distribute it to your networks as well. A huge thanks to so many of our nonprofit partners and local chambers and local minority development organizations, the CDFIs, like all of those who are involved here who've been helping to spread the word to help grow the audience to join us and have this conversation. That said, let me introduce myself to those of you who I haven't had the opportunity to meet yet. My name is Ricky Amos. I am the Executive Director of the IFA Foundation. Our job at the IFA Foundation is the nonprofit arm of the International Franchise Association. That means we are trying to reach out and educate people about the franchise business model, help them understand how it's a force for good in communities, and how to think about growing franchising and addressing challenges. We focus particularly in the areas of veterans, underrepresented communities, minorities, women, you name it, trying to increase ownership within that, because we know that these folks are particularly successful in franchising, and we want to create new opportunities and open access to multi-generational wealth that might not have been so easy to pursue as an independent business owner. So that's what we do. And then for those of you who haven't come across the International Franchise Association yet, I'll tell you a little bit about us, that part of us. We were founded in 1960. We're the oldest and largest organization that focuses on the franchise business model. And so within our membership, so many people think of franchising and they think the quick service restaurants, the McDonald's, the Wendy's, the Burger Kings, but, really what it is just every sector of the US economy and the international economy, it has franchising in it. So elder care services, vet services, lawn services, like you name it, anything pretty much in your home or out in the service sector and industry, services and providing to others. There is a franchise that's in there, that there are opportunities that are available. And a big part of what we do is to help raise awareness of what those different opportunities could be and what they would look like. So we want to make sure that you're learning about that as well. So more than 1,000 brands, 15,000 individual franchises, more than 500 supplier members, because that's another part of this puzzle. There are plenty of businesses out there that are also looking for opportunities to service and supply franchise members to begin with. So as we're getting ready to turn into what we're going to be talking about today, as I was mentioning earlier at the top of the call, we really want to have the conversation about what does it take to access capital? What does it take to be financially ready? What do you need to understand in the franchising world in particular, and when you're assessing your fit and readiness, and what is unique about franchising as you're going through your capital journey? So before we jump over to that, I'm going to do first some logistical announcements. I mentioned that we will be recording this so that it is available for others who can't join us live for download later, and for reference for you moving forward. We are going to take questions in our chat box. I definitely encourage you. This panel that we have available today is amazing, and the insights that they are willing to share is fantastic. So please ask your questions along the way. There is no bad question. You can either sometimes ask them directly, or if you want to ask them of everybody, please do that. We will make sure they get directed to our panelists along the way. And we're going to ask everybody, make sure you stay on mute throughout it so that we can get a nice clean recording for others to be able to record, to access moving forward. And then the next, to kick us off in our discussion, I want to introduce you to two great people. So a big part of advancing this programming at the IFA Foundation requires, wonderful program managers to make sure that it's able to happen. So you're going to, through the course of this panel, get to know David Smith. David is our Senior Manager of Diversity Programs. He's a new addition to our team. David will be specifically focused on reaching out to underrepresented communities, our nonprofit partners, and our franchise brands to talk about how diversity, equity, and inclusion can drive development within franchising. And then the person I'm going to turn it over to next for a few minutes is Eric Johnson. Eric is a Marine. He works on our Vet Friend program as our manager of veterans programs. And so he is also particularly focused on working with our veteran community, military spouses, and military connected communities, and getting them involved and educated about franchising. So as we get into a lot of these conversations about capital, one of the things I say is so often, a veteran story is a diversity story, is a community story. So much of this is really kind of driven and tied together, because what we want to do with the foundation is make sure everybody in these communities has access to opportunity. They are educated and prepared to take advantage of it when it's in front of them. And we want to help connect the dots to some great brands. So I'd love to introduce you to Eric for a few minutes. He can tell you a little bit about our Vet Friend program, and then we'll jump into our full program from there. So Eric, let me turn it over to you.
Thanks, Ricky. So Vet Friend has been a part of the IFA Foundation since pretty much its beginning. And actually even before that, Vet Friend updates it. We're a 30-year program founded by some franchisors that saw veterans returning from the first Gulf War and saying, hey, these guys, let's help find them some opportunities. And the concept of Vet Friend is that over 450 brands, and it's growing every day. We constantly have new brands coming on board and saying, hey, we want to get involved. Are saying that we're willing to offer discounts to veterans who are interested in becoming a franchisee, becoming an owner and a part of our brand. So they're offering discounts anywhere from 10 to 100% off their franchise fees. They're offering discounts off their royalties collected, so that veterans can come in and become part of their brand, because they realize that veterans have leadership and team building skills and just a wealth of experience that really helps them take the franchise concept and run with it. Our website, vetfriend.org, has over 5,500 unique visitors every month. So if you're a brand and you're thinking, hey, I want to attract more veterans, it's a great place to be, to get involved, to make sure that your name is listed. If you're a veteran and you're saying, hey, I'm looking at my options and trying to figure out what opportunity is best, come to vetfriend.org, look at over 450 brands, like I said, and you can sort them. I'm looking to get into window washing, or maybe I'm looking to get logistics or food service, any sort of industry out there. We have them listed. You can sort by that. You can figure out what your financial commitment might be to get involved. And so it's just a great wealth of resource, plus some great information where we have video libraries on financing and getting started, legalities, different things like that. So vetfriend.org, encourage you to check that out. We're a growing program. A lot of new exciting things happening, innovations on our website, new programs kicking off all the time, new partnerships being built. So whether you're a veteran or you're a brand that's looking to reach out to veterans, I really encourage you to get involved with vetfriend.org. I'll drop my email into the chat so you can get that information. But it's just for your reference, it's ejohnson@franchise.org. happy to have a conversation with you anytime about how VetFriend can help meet your either your business, your business ideas as a veteran, or your outreach program as a brand. And with that, I'm going to turn it over to Jack Wilson, who's going to help lead the conversation today. Jack is with Franchise Brokers Association and the Results team. Jack, take it away.
Thank you so much, Eric. And, I feel privileged to really have the opportunity to moderate this discussion. It's a timely topic. It's a relevant topic. And as Ricky mentioned, David Smith, the Senior Manager of Diversity Programs with the IFA Foundation, he's assembled an experienced panel today. And we're confident this discussion and the information dispensed is certain to help you, whether you're a franchisor, a franchise consultant, an existing franchisee, or someone seeking business ownership as a franchisee. And again, as Ricky mentioned, although Q&A is going to be on the agenda, feel free to start entering your questions right in the chat as you think of them. Then Ashley and team will get them to me so that the panel can address them. So let's begin with some brief introductions, and you'll be able to get their bios later. But let's start with some introductions. 30 to 60-second introductions from, let's start with Jim, please.
Good afternoon. Pleasure to be with you all. I'm Jim Fliss. I'm the National SBA Manager. I also run our national franchise business for KeyBank. In short, I've got a sales force of bankers across the country that work with small to medium-sized business owners.
Thank you, Jim. We're looking forward to talking to you today.
Pleased to be here.
Great. Linwood, please.
Thank you so much. I am honored to have been asked to participate in this forum. Again, Linwood Long, CEO of the African American Alliance of CDFI CEOs, the only organization in this nation that represent Black-led CDFIs, 65 strong leaders across the United States. In about 35 states, but representing service in all 50 states. And so we are delighted to represent Black-led CDFIs.
And we're delighted to have you, Linwood. We're looking forward to speaking with you as well. Ms. Brooks.
Hi, everyone. I'm very happy to be here as well. My name is Portia Brooks. I am the CEO of Brooks Partners Finance. So we're a brokerage firm that's located in New York, but we do serve all 50 states. And we help business owners get financing to either start a business, maintain their business, or grow their business. And we do this with a two-step process. First, we get you a lending product or match you with a lending product that's right for you and right for your business. And then we provide you with up to 3 pre-approvals from lenders that actually provide that product.
Love it. We love to hear that, Portia. Thank you. And if Tony's here, Tony. Has he not joined us yet? That's okay. We'll get to Tony when he joins us. Let's begin with our panel, and we're going to start with Jim. He's with KeyBank. So Jim, what are the basic items that an entrepreneur needs to have ready when seeking to speak with a representative of KeyBank? And is there a checklist?
Yeah, that's a great question. I tend to think of it in a couple of buckets. The first being what I would call a pre-qualification conversation. Just, does the deal or the opportunity sort of pass the sniff test? Some basic questions, some basic engagement, because, it really helps save everyone's time and helps get people pointed in the right direction. And then the second step is the actual formal application. So let me talk a little bit about a typical pre-qualification conversation. A call comes in and, one of the first questions that I'm going to ask is, where is the franchise located, right? So is it in a market that my particular bank lends in or not? Is it in Albuquerque, New Mexico, or Akron, Ohio? I can do Akron, Ohio, but not Albuquerque. What is the cost, right? So ultimately, how much do you want to borrow? And I think this next question is really important, right? We and many banks are going to ask for a down payment, right? So if we know what the cost is, typically we're going to ask a question: do you have roughly 10% to put into that particular transaction? The other question, or another question I would ask is, what type of fallback cash do you have? And people say, well, how much do I need, beyond my initial down payment? Somewhere between 6 to 12 months of whatever the debt service might be, would be probably an appropriate amount of additional cash for contingencies. Beyond that, I would ask a simple question like, hey, how's your credit? Any issues with your credit, bankruptcies, things of that nature. And then lastly, sort of around a resume. Well, we recognize that a franchise model gives you structure, sort of gives you a playbook. Having some transferable skills, tell me a little bit about your background, would be the things that I would focus in that initial conversation. And then assuming that, seems to work for everyone, we would talk more about a formal application, and a bank check would provide a checklist. Hey, this is exactly what we need, right? So some items that we would need would be a personal financial statement. Almost all banks are going to ask for this. And this is simply a listing of what you own personally, all of your assets, cash, savings, home, car, and what you owe. Your car payments, your house payments, your credit card payments, and the difference, of course, being, the net worth. We would ask standard and customary for 3 years of personal tax returns. Typically on any owner that's more than 20%, we would get a few years of personal tax returns. The third thing that we would look for in a formal application, and this is important, would be projections and assumptions, right? So how much revenue, how much sales do you think this enterprise is going to bring in, and what are the expenses involved? And at the end of the day, do we have enough profit to service the size of loan that we were talking about? But building out projections for both a profit and loss statement and a balance sheet would be important. We would ask questions, are you going to lease the facility and build it out, or are you going to buy real estate? Because that'll affect the cost. Do you have a contractor in place? What is the cost to build the space out? Right. So all of those, particulars would come to light at this stage of the process. And the last thing that we would do would be to pull personal credit. Where we maybe casually asked in the initial conversation, hey, any issues with credit? No, things are good. A bank still will pull credit formally. The last point I'd make is, in terms of the projections and assumptions that you need to provide, there's organizations like SCORE that can help. They're kind of aligned with the SBA, the Small Business Administration, help provide some counsel and some guidance on how to put together financial projections and the assumptions around those projections. Working closely with the franchisor, they're going to give you some of that as well. Advisors like CPAs, attorneys can also be very, very helpful.
Jim, I really appreciate that comment, and really the plug for SCORE. As you may know, I'm a certified business mentor for SCORE, and you're exactly right. There's a lot of free information that you can get to get you ready to speak to a banker like Jim by going to the local chapter of SCORE in your city or town.
Yep.
Now, you mentioned that a 10%, there was a 10% requirement there. Does the franchise fee contribute to that 10%?
A lot of times we can roll that into the overall cost of the project, as well as build in some working capital. And 10% isn't an absolute. You might find a bank sometimes to do a little bit less, sometimes a little bit more, but generally that's where I would set the guidance. As you think about a franchise, you figure out what it costs. 10% is a pretty standard down payment to think about. And then having a little bit of fallback, maybe whatever your monthly loan payment would be, times 6 or 12. So you'd have 6 to 12 months of debt service sort of available in cash. But it can be less, it can be more.
Okay, good. And you know, the good thing is that if you're dealing with a franchisor, they're going to provide you ultimately something called an FDD, a franchise disclosure document.
Thank
That's
you.
going to give you
Yep.
your estimated cost. That'll help you. If you're dealing with a franchise consultant who, you know, actually isn't going to charge you, they can kind of guide you through that to help you get those financials together. Now, Jim, there's another phenomenon that you're aware of in franchising, and it's acquiring an existing franchise. They're called resales.
Yep.
How would the bank deal with someone who's coming in as a new franchisee and they want to buy an existing operating cash flowing franchise?
Yep.
How do they need to be prepared when they have a discussion with you?
Yeah, I think, you know, and you would still get a borrower's personal tax returns. You would put less emphasis on projections and assumptions, right? And what you would do is get the tax returns of the selling entity, right? Because that's what the bank's going to want to know, right? If it's a startup, give me projections and assumptions of how you're going to get there. If it's a situation where someone's buying an existing franchise, well, tell me how profitable that franchise has been historically, and how much do they want for their business, right? And it's kind of, it's different, but it's very, very similar in a lot of ways. So getting the financials of the company that you're buying is really the biggest difference.
Great. Well, thanks for sharing that. As everyone on this call knows, we're going through one of the largest, actually the largest transfer of wealth ever in this country. And with folks retiring now, the baby boomers, guess what?
Yep.
41% of the businesses that are out there, the small businesses, are owned by baby boomers going through that process.
Yep.
So knowing that info that you just shared, Jim, is critical, because that's a way to get a cash flowing business with a proven model of a franchisor that really wants somebody to keep that business running.
Yeah,
So,
and you make a great point about a cash flowing business. So let's say you wanted to buy a franchise that's existing, and you get under the hood, they show you the tax returns, and all of a sudden you realize this thing is losing money year after year after year, right? That's going to be a different conversation with the bank.
mhm.
You know, go into the bank saying, hey, I'm going to buy this, I'm going to turn it around, I'm going to do all these wonderful things. You know, that might be a tougher sell, right? You're almost better starting one up in some cases, you know, but to your point, there are a lot of businesses that are changing hands. Sellers can help finance portions of those businesses. So, you know, maybe, you look at something like that, you put some money in, the bank puts some money in, and the seller carries, a little bit of the paper too. And that's a way to get a deal done a little bit more creatively.
That's excellent, Jim. Thanks for bringing that out. And final question for you, Jim. When someone's considering a franchise, how early in the process should that potential borrower start exploring funding?
I think it really can be any time. And honestly, I think that when you're equipped to have a meaningful pre-qualification conversation, a brand, you've got a brand identified, a franchise brand, you have a location, you have an idea of the cost and what you want to, how big the loan would be, you have the money to put down and a little bit of fallback, you're in a good position because if you go to a bank and you don't know how much you want to borrow, you don't know how much money you're going to have to put down or fall back on, right? The conversation just is going to be sort of hollow. It's going to be empty. I'm going to say, geez, I really want to help. I want to understand, but I can't help because I need this basic information. But once you know those things, I would engage with the banker, talk about the process, get the checklist that you talked about. And if you deem, it worthy, then you formally apply.
Excellent. Thank you very much, Jim. I can tell there are going to be a number of questions for you, so hang around when we get to that Q&A piece.
Sounds good.
Excellent. So next, we're going to hear from Linwood Long Sr. He's the president and CEO of the African American Alliance of CDFI CEOs. And Mr. Long, we're looking forward to hearing from you. Thank you for being with us today. All right, let's go to our first.
Let me unmute myself.
There you go. Hey, you're ready. And we definitely want to hear what you have to say. And
Sure.
Ricky mentioned CDFIs earlier. I've mentioned it before, but for our audience, regardless of who they are, what is a CDFI? How are they different from a traditional bank like we just heard from? And how are they capitalized?
Sure. Great question. I will keep it sort of simple definition. Community development financial institutions, aka CDFIs, are really mission-focused, community-based organization that primarily focus on meeting underserved and marginalized communities with a variety of financial products, whether it be small business loans, commercial real estate, community facilities, or housing. And so I think the mainstream is the point that they really focus upon underserved communities. And I think that would sort of separate them from their motive is not dividends reaped for members on the board, shareholders, but dividends for growth and sustainability of communities.
That is very interesting. And the IFA has been really getting the word out about CDFIs to franchisors who are looking for funding opportunities for their franchisees, as well as franchisees that are looking for funding sources. So we appreciate you being here. Now,
Sure.
For aspiring entrepreneurs, when's a good time to consider a CDFI as a capital source?
So one of the things that many CDFIs say that they are dream catchers, right? Literally meaning that we really want to help you realize your dream. And you may start from the beginning. And I think Jim did a great job just laying out the financial process. But I think that there will be a little iteration with the CDFI. They would really literally want to get the whole part of you. It wouldn't necessarily be credit score driven. They would want to know the character side of you in addition to the financial picture. All right, because the loan has to be repaid, right? The debt has to be paid. And you got to show through all the financial statements, tax returns, and all of those things. But I think that there's another side, and that is before you even get to the credit score, and the credit score may not be the determining factors. There are a number of factors that the CDFIs would consider, whereas in some cases, if the credit score was not a 650, you may be locked out. Not in all cases, but most of the time, CDFI would be intentional and doing complete discovery about your aspirations and obviously your capacity to repay the debt.
That's excellent. We love hearing that, because a lot of times financiers will talk about, the 4 C's and so forth, and character is one of them.
Sure.
And you just highlighted how character holds a significant amount of weight in that variable.
Yeah, for example, there may be when you examine the credit score, some other dimension, there could have been a cataclysmic incident that really,
Right.
whether it was medical, a layoff, or something that happened that prevented that individual cause, right, a dip in a score, but was able to recover. And so I think a CDFI would really examine what was the cause, and then began to develop a plan for recovery.
Okay, excellent. Thank you. Now,
Sure.
Many in this world of franchising that we're in here, they're just unfamiliar with CDFI. So why would a person seeking a franchise or a franchisor looking for funding go to a CDFI? I know you touched on a few things, but what other type of assistance? I'm a little familiar with CDFI. So what other type of assistance
Sure.
might you provide?
In addition to, let me say this, that some CDFIs are not familiar with the franchise operation. And I think that there needs to be better understanding on both sides of the ledger, that the franchising industry needs in some kind of way make its products and service known to CDFIs, and CDFIs need to reach out as well. When I was managing a CDFI, that's certainly one of the things we did fund some. And I do think part of it is getting to know the operator, the one who really want to purchase, fully understanding. And then it may be something that really banks don't really do, and that is providing technical assistance along the way, which is critically important. That technical assistance is, banks created this phrase, personal banker. CDFIs started as personal bankers, right? They literally started to hold in the hands of those who come in who was not quite ready, but we worked with them to get them ready. And then, and here's something that CDFI will do. Many times, we will graduate our borrowers to be bankable. And that is work with them to the extent, give them that first line credit. They grow, they develop a great credit history, and may need more capital than the CDFI can provide. Therefore, it can be a great partnership. That's why we have such great partnership with the banking industry.
Yeah, that technical assistance piece, you're right, Linwood, is awesome. And you know what? We are making headway with the help of the IFA, getting this word out about CDFIs. We have franchisors, like one of our panelists, Tony Nicholson with Self-Esteem Brands. He's actually running a pilot program with the CDFI, zeroing in on this exact group that we're talking about, the underserved community and African-American community. So yeah, the word's getting out. You're right. There's education that has to happen on both sides so it can work. One more question for you at the moment, sir. And I saw the question pop up in the chat, and it was a question similar to what I was going to ask. Are there limitations for a CDFI, either from a funding level or from a type of franchise that you would fund?
It literally varies from CDFIs across this nation. Many of them, will have capital resources, do lending from 200,000 up to some up to 5 million. So it depends upon the CDFI, its location. And so let me make this point. It is those funding limitations at times create partnership opportunities where a CDFI will reach out to a banking partner, and let's say it's $1 million deal. The good news is that they can combine that partnership and do a loan participation where perhaps the bank take a part and the CDFI take a part. And the net effect of that is that a deal is completed. And I think that's a good model. But to really answer your question, it depends upon the CDFI, based upon the type of franchise it is, and the amount. But what I want to say is that I would like to be a point person in making sure that this industry is known, especially in our membership, because I think there are opportunities.
Excellent. And you know what? I'm going to leave that part to Ricky and David, but you're exactly right, Linwood. And I really appreciate you bringing up the participation part and the technical assistance part. So if you're an aspiring franchisee, and you're thinking about this, or maybe someone, who is a franchisee thinking about additional funding, and you have a CDFI you're partnered with, and that funding amount is pretty large, they're providing you the technical assistance to really help you check off the list on somebody like Jim's checklist. And then Jim comes in and takes care of the rest. Can you imagine? See, all of a sudden you're finding creative ways. Franchisors, are you listening? Franchisees, you're finding creative ways to really fund this business and fulfill these dream catchers ideas of really realizing your dream of business ownership. Thank you very much, Mr. Long. We'll
Sure.
be back to you shortly. We're going to go to our next panelist here, and that's Portia Brooks. She's the founder of Brooks Partners Finance. Portia, welcome.
Thank you.
It's so good to have you here. Now, in the entrepreneurship section, we hear this term alternative forms of capital quite often. What are some of those forms of capital, some funding limits, and how does Brooks Partners Finance help a business person determine what's the best option?
So, Jack, that's like a 3-part question, but no problem. To explain alternative financing, first, I like to define traditional financing. And with traditional financing, we're talking about depository institutions that lend money. And so that's going to be your local bank or, wherever you have your checking or your savings account. So people deposit money with these banks, and then therefore the banks are able to turn around and lend that money out to the community. So when it comes to alternative financing, these are non-depository institutions. And so normally, for the most part, these are lenders that borrow money from different sources and they lend that money out to you. So because this is borrowed money, the fees and the interest rates are normally a bit higher, but the qualifications to receive this funding are less stringent. So it's easier to get a loan with alternative financing lenders than it would be your local bank. But additionally, these alternative financing lenders, they sometimes do receive grant money from organizations and people. And so instead of basically giving you a loan that you have to pay back, some of them are able to give you a grant that you do not have to pay back. But, grant financing is actually it's kind of rare. And usually you're competing with a lot of other businesses to receive whatever limited funds, they would have. But to sum that up, traditional financing is with banks, and then alternative financing is with non-banks. And so then some examples of alternative financing for startups, for some existing businesses, but a lot of times really for startups too, we're talking about online non-depository banks. We're talking about CDFIs, that Linwood just spoke about as well. There's also state and government programs, and there's as well as nonprofit lending institutions. And then most of the time, those serve specific cities and states and regions as well. And then there's also the option of not having to borrow funds. And so if you do, for instance, have a 401k, you can pay a company a service fee, and then they're going to help you take out money from your 401k and roll it into a C Corp. And then you can establish a business that way, as well. And as far as you spoke about dollar amount, like funding amount. So as far as funding limits, I would say traditional financing can probably provide more money because they have the closest thing to unlimited resources, being that they're getting deposits from the community. But since alternative lenders are, they're getting their funds from everywhere, but deposits. So they normally have a lower maximum loan amount than banks do. But for the most part, though, people will see, with the franchisee or, anyone that's going for funding, most of the time they're going to see a similar approval amount from a traditional source. Then, it's the same really as they would alternative lender, just because the approval amount is going to be based off of what they can afford to pay back. Linwood spoke about that as well. And so, but as far as, how we help with it, these programs, all of the programs that I spoke about, they can be found, really through Google research, or you can come to us and we'll match you with, a traditional lender or an alternative lender that you can qualify for. And so when we go to match you with these products, we're going to take into consideration what you want, what your business needs are. And normally, your use of funds, exactly what you're using the funds for, what kind of franchise that, you're going for, as well as your current qualifications and the type of payment that you can afford. All of that together is going to place you in a particular lending category, which makes our job a lot easier.
Yeah, well, thank you. And I apologize for the compound question. So, being a former alternative finance provider, I understand that sometimes business people think, I need a loan. I need a business loan. But when you peel back the onion, you may see that maybe it's for equipment. Maybe they have a large purchase order. Maybe they have some tremendous customers, but they're just taking long times to be able to, get paid. They have, long outstanding AR. How could these things really be solved with something other than just a traditional, give me a working capital loan?
Okay, well, in that case, so again, to receive a loan, right? And so you're talking about either you're starting a loan, or you're starting a business, or you are maintaining a business, or you're looking to expand your business. And what you spoke about a lot of times goes into maintaining your business. And so if you need equipment, or if you need, just really like if inventory or just anything to go towards maintaining your business. If you do have accounts receivable and then you need working capital, you can, there are lenders out there, whether that's SBA, so whether that's traditional or alternative, because there are alternative lenders that can take your accounts receivable and then they can extend you, they can extend you that money forefront. So, ahead of time, basically. And then they'll basically charge a fee for that, but they'll give you up to 80% of your contract money that you're waiting for, your invoice money that you're waiting for. So, but with that, what we're doing is when you come to us and you let us know exactly what you want, what basically the use of funds, what you need funds for, if it's equipment or if it's something more to do with a line of credit, because it's more so working capital that you need, but you can pay it back right away, but you need working capital, seasonally or, throughout the lifetime of your business, we can basically see exactly what product that we're going to place you in. So is that a line of credit? Is that, there's also merchant cash advances, which are not the best for every business, but at the same time, that's immediate funding. And so that's an alternative form of capital too, but that's not for startup businesses. So that wouldn't be for a startup franchise, but if you are, a franchisee that you are existing and you need working capital, that potentially could be an option for you too, because that's 24 to 48 hour funding. So there's basically, it depends exactly what you need the funds for, and if it is equipment, there are equipment lenders out there too. So it's not just banks. So there's alternative equipment lenders out there that's basically specialize in just equipment financing, as they can provide you financing pretty quickly, much faster than a bank, have less qualifications or, credit wise, less documents that they're asking for. Some of them can do an app only. So it's really just looking at your credit score and they can approve you. So there are many different forms of financing that, out there, alternative wise, if you are, like I said, existing, or whether you're a startup or whether you're looking to open a new, a franchise or open, expand your business somehow. But we're going to look at exactly why you need the funds and then place you in a category and then find those lenders up to 3 that you can choose from, once we have that product for you.
Yeah, I love that value add that Brooks Financial offers, of really doing some legwork for me after I, as the borrower, have given you what I'm looking for, what I'm trying to do. I might not know the vernacular or which tool to use. That's where your expertise comes in and really helps. So even what we're saying is, even if the traditional bank says no, that doesn't mean that your dream is off. That means maybe you go in a different direction, right?
Exactly. There's so many people out there that want to give you money. And that's just honestly speaking. And so there's so many types of alternative lending. And again, because a lot of it is, lots of companies that go out, and whether they're getting money in grant form or whether they're borrowing money, from other sources, they want to extend that money to you. And a lot of times when it's not a bank, now you have, individuals that are essentially, trying to run a business this way. And so their qualifications are just, less stringent. So they have less of a credit score criteria. They may accept 580 or potentially less, where a bank is going to accept 650 or 700, or your time in business. A lot of times with banks, when franchises is one thing, because franchises, it's more so it's mitigated risk because you're going into a franchisee. But as far as with just a regular, startup business, that's a lot of risk, and a lot of banks don't do that. But then there are, companies out there that will do that. So your time in business doesn't matter as much. It's just more so potentially maybe collateral. What kind of, do you have a home that you can come to the table with? Do you have any type of equipment? What other types of collateral do you potentially have that they can use to grant you that, those funds as well? But there's a lot of money out there.
Great. Thank you, Portia. Now, when we talked to Jim, we talked about documentation. We know it's out there. What type of documentation is generally required when a person's seeking funding from your firm?
So very similar. We're not the lender, right? So we are the broker, but we know what the lender wants. And so we're going to request everything from you up front so that we can see which lender is able to approve you. And so it depends exactly, like I said, depends on what type of funding you want. Every program has different requirements, but with most franchises, they do want a long-term loan, especially if they're going for that first franchise. We're not talking about necessarily the working capital piece of it, but if you are trying to open up and establish a franchise for the first time, then most likely you want a long-term loan, meaning something that's going to carry out maybe 10 years. So you have a payment that you can afford over that time. And so for that, we're going to ask for, documents within 4 categories. We're going to, look at your financials. We're going to look at the collateral that you're bringing to the table. We're going to look at your credit. And we're also going to look at different conditions, which is for us, like, credibility, that you're able to move forward with what you're trying to do. The conditions piece would be if you're franchisee, right? So you're bringing that FDD agreement to the table, and you're also bringing a business plan to the table. So this is what we're going to look at, that because our lenders are going to want to see that. They're going to want to know what type of franchise that you're getting into. Some lenders have requirements as to how many units or how many franchises that that company has in the community. And so some won't fund less than 40 or less than 50 franchises in the community. And as far as the business plan goes, they want to make sure that you know exactly what you're getting into. You have you have the right mindset to move forward, and they can basically trust that you're going to be able to get this business up and going and pay them back. When it comes to financials, we're going to ask for bank statements. We're going to ask for tax returns. If you're a startup business, it's more so your personal tax returns. Is going to be your personal bank statements. And if it's going to be 2 years of financial projections as well, because lenders are going to want to see when exactly, are you going to be turning a profit? Are they going to be able to get their money back? And then if it's an existing business or an existing franchise, you need working capital, or you're trying to open another franchise, then we're going to ask for some business documents as well. So then we're going to ask for some business tax returns and business bank statements and your year-to-date profit and loss and balance sheet. All of this together is going to say, are you cash flowing, or how much money do you have to be able to pay this loan back, or either how has your business been doing historically? And Jim was speaking about this, or what do your projections look like? We're going to look at collateral as well. So Jim spoke about this. So we're going to ask for your personal financial statement also, and this is going to show what kind of assets you have, what kind of liquidity do you have currently, like how much money do you have in the bank? What's your net worth? And so the lenders are going to want to see this, because this can mitigate. You don't necessarily have to come to the table with collateral, but it does mitigate a loan and a risk for a startup, business. And so with that, we also look at credit. And we're going to ask for your tri-merge credit report. And with that, there are lenders that, every lender is different, and every lender has different qualifications. And this is really why, where we come in and we're able to help out businesses, because not every lender is looking at all 3 of your credit scores or 3 of your credit reports. Some look at Experience, some look at TransUnion, some look at Equifax, and some will take certain derogatories that other lenders won't. And so we're able to look at your report, look at your score, see exactly what's going on, and then take that information for what it is. You're not saying, okay, you got to change this, you got to change this, you got to change this. No, take that information for what it is, and then just match it with the lenders that are able to approve you based on what you're currently, coming to the table with. And so we take a lot of the guesswork out of who's going to approve you once we get all of your documents.
That's wonderful. And for all of you in the audience, we know that Jim has said a lot, and Linwood has said a lot, and Portia has said a lot. Don't let it scare you. They're professionals, and they help guide you through all of that. It's just part of doing business. It's doable, and there's thousands of people that are proof that it's doable. So hang in there, keep taking notes. We're getting your questions, so you'll get a chance to ask those questions as well. One more question for you, Portia. The title here is Breaking Down Barriers, Financial Readiness, and Accessing Capital in Diverse Communities. So here's the question. Brooks Brothers obviously has a long track record of successfully funding and great client reviews. I saw them all on your website. However, why should a minority borrower feel comfortable to work with your firm when seeking funding for franchising or working capital?
That's a great question. Okay, so I like to point out 3 reasons why, someone should work with Brooks Partners Finance. And one, I would say, is we speed up that approval process and the funding process as well, because we know what our lenders are looking for. And so we're only going to match you with lenders who want files like yours. And when it comes to minority business owners, there are a lot of lenders out there who cater to minority business owners. Linwood spoke about the CDFIs. There are CDFIs all across the country, and a lot of them are mission-based, and they want to work with minority business owners. And so those are the lenders a lot of times that were first, depending on exactly, what you're coming to the table with. So if you are a minority, we're going to look at that, and we're going to match you with, those lenders who want your file and want business like yours. So that we're going to seek out those approvals first, because most likely they'll probably provide you with the best approvals. And as far as, I would say, another one, we take the stress and anxiety out of the lending process. So going for a loan, can be very stressful. And you spoke about us talking about so many different things here. It is like, it's so much information, but it's stressful because of the unknowns. And with individuals, you don't know the process, you don't know what to say to the lender or what not to say, right? You don't know if you're going to get approved. You don't know if you're wasting your time, or what the terms are going to look like. And you may go through the entire process just to find out you're not approved. So basically, we're able to fill you in on all of the unknowns and be your advocate throughout the process. And so I like to look at it like it's like standing in front of a judge, a judge by yourself versus with your attorney. 9 times out of 10, you're always going to feel better with your attorney by your side. So I would say, those are 2 out. A big one for me, probably my favorite, why business owners, minority business, businesses included, should work with us, is because we put the power back in the business owner's hands, right? So now, because we're getting you up to 3 pre-approvals, you can compare and contrast your options. So you can see who's giving you the better APR, who's giving you the better term length, the loan amount, etc. Most of the time when you go for a loan, most of the time when you go for a loan, you're going off of one option. You hope that one lender that you're talking to is the right lender, and you don't have to continue to search. But everyone knows that the consumer has the power only when there are companies competing for your business. So with us, our lenders are competing for your business, not the other way around.
That's powerful. Thank you very much, Portia, for helping people understand alternative financing. And hopefully everyone listening sees that, whether you're working with a traditional bank like Jim, a CDFIs like Linwood, or someone with a firm like Portia's, you have to find the right fit. And maybe you'll use one or more or some combination of them, but really do your homework on that. And your franchisor can help with that. If you are a franchisor, maybe a franchise consultant can help with that. But what I love about the IFA is they're giving us a platform here to discuss these things, put them on the table, and then start connecting people and connecting organizations and providing solutions so that that dream of business ownership ends up being more than a dream. It ends up being a reality, because funding is a critical piece, and having readiness to access to capital is just as critical, so that you can be successful when you're sitting in front of an individual or a company like we've just heard from. So now, and keep those questions coming in on the chat. We promise we'll get to them. Now we're going to shift gears here. We're going to actually speak to a franchisor. This is Tony Nicholson. He's the Vice President of Franchise Development for a pretty nice size franchisor. They're called Self-Esteem Brands. And Tony, since you didn't get a chance to give a little intro, if you wouldn't mind giving us a little intro about you and Self-Esteem Brands and the brands you guys have.
Yeah. Hey, Jack. Can you guys hear me okay?
Excellent. Yes.
So I actually, I hit a firewall at my office trying to log in. Don't know why it happened. So I'm actually on my iPhone. So thanks for the invite. Thanks for the intro. My name is Tony Nicholson. I am the VP of Sales and Development for Self-Esteem Brands. We're a holding company that actually owns the rights to multiple brands, seven, 4 brands that we franchise. You may recognize our largest brand, Anytime Fitness. Anytime Fitness is the largest fitness-based franchise system in the world, with 3,000 stores here in the US, 5,000 global. And we typically, with that brand alone, will award about 150 licenses / territories a year. And then outside of the US and Canada, we actually have a master franchisee relationship with investors from the UK, Southeast Asia, Africa, India. We're actually one of a handful of brands who are on all 7 continents. So that's one very, very large brand. We have a few others, mostly in the fitness space. We've got Basecamp Fitness, more of a startup brand. 15 stores open today with about 100 stores coming down the pike. We've got another fitness brand called The Bar Method. And then we've got a non-fitness brand called Waxing the City. Very, very hot brand coming out of COVID-19. Again, combined, we'll award about 300 licenses per year. I've been with the brand for 13 years. I've been in sales and development for quite a long time. And so I'm excited to share with you guys my history. Oh, I also want to mention too, that I'm also a franchisee. So I've been a franchisee with Anytime Fitness for 18 years. We've owned 5 locations. And a lot has changed over the last couple of years. So I'm happy to kind of dive into that as we go throughout the process.
That's excellent, Tony. Thank you very much. And you mentioned, being a franchisee. So if you can kind of think back to when you were looking to get your first or maybe your second, because we know you're a multi-unit franchisee, what did you learn about getting access to capital that helps you and your team now with prospective franchisees today?
Yeah, no, it's great, Jack. I would say that, and a lot has changed. So me being around in franchising as a franchisee for the last 18 years, a lot has really changed, right? And one of the big things that we've noticed is that SBA loans back when my wife and I first became franchisees, it was not an option. And also candidly admit too that if you look at some of these startup expenses that we're now recognizing, and a lot of that's due to inflation, a lot of that's due to some other challenges, especially coming out of COVID-19. But some of our project costs have now become a little bit higher. So we're actually actively working now to try to find ways to get a little more creative, bring down those costs. So it's more of a lower barrier to entry. So if you look at it, franchising with Anytime Fitness compared to, let's say, Planet Fitness, and I get it. That's like comparing an Apple to a bazooka, right? We've got a much more smaller, streamlined footprint with the actual footprint of the size of the space. A lot less equipment. Typically, our average stores are going to have about 150,000 worth of equipment compared to a Planet Fitness with 1.2 to 1.9 million worth of equipment. So the big thing is that back when we first started, SBA loans weren't an option, whereas I'd say now today, this is anecdotal, but I would say 85% of our franchisees are typically looking to go down more of an SBA path. So that's the biggest thing is then, back when my wife and I became franchisees, we actually tapped into all of our accounts except for our 401ks. And we opened up our first location within 7 to 8 months. We were in a really, really good spot. We actually we're able to, with a very solid pre-sales process, we were able to get to a break-even point relatively quickly. So we didn't need a ton of working capital at the time. And then right around month 7 or 8, the opportunity to open up our second location came about. So we had taxed most of our resources. So we did actually get a small loan from my mother-in-law, right? So I'll kind of expand on this later, but getting our clients to look at all options, all avenues, tap into a bunch of different resources, bring on partners, be prepared to make some sacrifices. And look, if it's not the right fit today, it doesn't mean that this won't work out 12 months from now, 24 months from now, 36 months from now. So really kind of getting our folks to say, let's really wrap our arms around your current financial position, your current experience position. And even if it doesn't work out today, how can we really get you guys ready to be partners with us and franchisees in X amount of time?
That's excellent. Thank you very much. Now let's shift hats here to your franchisor role here. When you're considering a new franchisee, what financial attributes are you and your team looking for?
Yeah, the basics, right? And as Portia mentioned, we haven't been exposed from self-esteem brands lens to alternative options. We've, as I'd mentioned, SBA has been a big thing, but then also, some traditional funds as well. And then we also do still have the ability now, even though SBA is the biggest, resource, getting financing for folks' equipment, right? So, and then also tapping into turnkey build outs, having more successful pre-sales. And so I'll kind of break this up into two different things. So on the financial side, having a solid credit score, we'll actually send out relatively quickly in the sales process. We will send out a personal finance statement, and it's intended to be a rough draft of, give me an idea, Mr. and Mrs. Prospect, what do your current finances look like? So we look at certain things like 401ks, IRAs, cash, stocks, bonds, annuities, checking. And then this has changed a little bit in the last, year or so, but then also, looking at certain things like a HELOC, right? Being able to pull equity out of a home, out of a property. So all those things, right? So on the financial side, we really want to get a good, solid picture of what their finances look like coming into the process. And typically we've got some thresholds. We know by, looking at someone's financial statement, we know, give or take, what their odds are of going through the process. And so we'll actually, for folks who are on the bubble, we will get them introduced pretty early on to our financing partners to get them a pre-qualification. So pre-qual in our world is a little bit different than a pre-approval, but it's just, basically looking at the FDD or the franchise disclosure document. And if the low end is X and the high end is this, we say, well, this person has to be able to meet the requirements of the very, very highest end of overall requirements. So getting that in hand is one thing, right? But then quickly to shift, we will look for some intangibles too. So we want folks who've got, a good background, and most of the clients that we partner with have never owned a small business, have never been in franchising. Most of them are corporate folks. And so there's not a lot of tangible experience from, what they've done now versus owning a business. There are some intangibles though. So there are, maybe they've been in marketing, maybe they've been in sales, maybe they've been in operations, maybe they've got some leadership skills, maybe they've been in retail in a previous life. So we take all those skills, all those assets, and then we basically import that into a business plan along with the personal finance statement, and we use that to get folks pre-qualified. So those are typically the things we're looking for out of the gate. And again, the sooner the better that we can get our arms wrapped around what those finances look like, what their experiences look like. And then again, for the folks who are maybe on the bubble, getting them pre-qualified so they don't go through the process, put down money for a franchise fee, and then also they're not able to actually get funding is a big, big thing for us. And then not to go too far down the process, but getting them pre-qualified for a loan is one thing. But then there's an even bigger, more important part, which is always variables. It's being able to get that franchisee, now that they've become a franchisee, get them in a position where they can actually sign off on a lease. Now, being pre-qualified for a loan is one thing, but being able to now work through some of the more choppy waters with landlords and developers has changed a little bit coming out of COVID, but making sure that now that they've got this pre-qual, they can also be financially qualified to sign off on a lease and that landlords have confidence.
And that's awesome, Tony. Thanks for giving that lay of the land, so to speak. So we really appreciate that. Now, for self-esteem brands, does SEB have any programs designed to help minority candidates meet these challenges of funding their businesses that we've been talking about?
Oh, that is the $64,000 question. Yeah. So, and I just want to be very, transparent that this is relatively new for self-esteem brands. About 2 years ago, we actually created a diversity, equity, and inclusion panel / council for us to just be more involved, actively lean in. We know, as the panel had mentioned, that there are a lot of underserviced communities out there that just so happen to be represented with folks that are people of color. So we know that there's an opportunity. We're just now kind of, scratching the surface as relates to different programs. But we've got one thing in place right now initially, and it's very much so reactive. It's not as proactive as we'd like, but it's now giving folks who qualify, which we've got 3 very specific categories. So it's either African-American, Native American, and or Latinx. And so those are the 3 different categories we've landed on as it relates to diversity within our system, because we all know that diversity can mean a lot of different things to a lot of different folks / organizations. So we've identified that group as a group that we would like to, and for the record, we've done our homework. We've done some surveying. we know exactly, with, give or take minus about 20%, we know exactly what our current diversity stance looks like compared to those 3 categories. And we know it's not good enough. We know that we're not hitting the mark. We know that we'd love to be able to increase that. And I'll just be very candid. I don't know what that looks like. Do we want to double it? Do we want to get it over 10%? It's not where it should be today. So we are right now in the process, Jack, of lining up some different partnerships, getting, connected with the J3 group's been important, partnering with the folks at IFA, and I'm kind of hopping around to different questions here. But we do have some things in place. We do know there's some opportunity there, but just to be very, very candid and very frank, we're not in a position where we feel it's good enough today. So there's some opportunities for us to improve.
And that's exactly how I look at it, Tony, as opportunity. The first thing is recognition, and then putting plans in place and executing those plans. And I love the way SEB is doing that right now. And more franchisors are starting to do that. I was at IFA convention in California earlier this year, and this was a big topic of discussion. So honestly, for those who are listening right now and seeking franchise ownership, the franchisors, many of them are sounding just like you just heard Tony sound. There's a window of opportunity now. And what we are trying to do is make sure you don't block yourself or have a barrier because you're thinking, I will never be able to get funding. Sessions like this and the first segment that was held in this series, as well as the next segment in the series, are all meant to allow you to get what you need information-wise and contact-wise, so you can take advantage of this window of opportunity that's really there to put yourself in a position to start a family business, begin the foundations of a family legacy, and perhaps even generational wealth through business ownership. Well, Tony, we have one more question for you, and it is related to the IFA, the International Franchise Association. How has IFA helped SEB when it comes to addressing challenges such as access to capital for franchisees?
Yeah, well, I would say that the biggest thing is just the exposure to different resources, right? And getting us connected to different groups, different organizations to help us think outside of the box, to help us get connected with some of these different pilots that we're looking to run, right? So one of the couple things, right, is just maybe some of that readiness, some of that education, getting the BIPOC community exposed to certain things that other groups, maybe the majority, have been exposed to for hundreds of years, right? So owning a small business, how to start it up, planting some of those seeds, mentorship opportunities. But again, just to kind of reiterate, I think that the biggest thing that we're seeing right now, not only from IFA, but then from other groups, is just getting exposure to some of these resources, right? Giving us the ability to lean into areas that we haven't historically done, knowing that there are some opportunities, right? So I would say that was probably the biggest thing we've noticed so far, but I'm optimistic that we are scratching the surface, right? Again, I think that we're just now unlocking some opportunities and some doors. I think that there's a lot more for us to hop into, and we're excited about it for sure.
Excellent. Thank you, Tony. And hang on, because we're going to now shift into Q&A. I know we had a lot of questions that popped up. So what we're going to do is jump over to them. And Ashley and David, thank you very, very much for helping with these. Let's see, how should we best handle these? First of all, for our panelists, there may be questions that are directed to you. If it's directed to you, obviously you can answer first. If it's not directed to you and you have something else to add, feel free to do that. If it's not directed to anyone, obviously any panelist can answer that question. So let's see if we can get to some of these questions here. Let's see. I'm going to kind of scroll back a little bit. Linwood, thank you very much. And Ricky for answering some of these questions here. Here was a question. Yeah. So where do you go to acquire the market analysis to be sure the franchise would be successful in a certain location?
I can lean in there, Jack. So at least from our side, on the franchisor side, we've got robust planning tools, market planning tools. One of the resources that we invest in every single year is called Buxton. And so Buxton is a Google-based platform that now gives us the ability to layer in a bunch of different things. We can layer in all of our current locations, along with coming soon. We can layer in demographic analysis, Nielsen data. We can layer in Experian data. So we know exactly what the consumers within that marketplace look like. Because of smartphones, with all the technology, we can follow folks around, where they shop, where they live, where they work, their education levels, all those things. We can get a good snapshot of consumers within a marketplace. We then dive into looking at all of the competition from a like for like, or even a apples to oranges comparison. We then can layer in commercial real estate, and then we plug it all in, and it spits out a feasibility study. And now it's very, very high level. It's not us making a promise and or a guarantee, but then on our tool, on our resource, it actually plants seed points and or target markets. And it's not the Bible, but it certainly is a really good start. And then we do some critical thinking. So if someone comes to me and says, look, I live in Chicago, what are the best, top 5 or 10 markets that are around me? Where should I be developing? We can go to the tool, plug in the information, come back with some analysis, run some demographics, and we can even stack rank them as well.
Yeah, thank you. Thank you very much, Tony. So there you heard it from a franchisor. And one of the things too that happens in the process is when you're dealing with a franchisor, eventually, if they like you enough and you like them enough and you're moving through the process, you get to a point called validation. And although it won't be specific to a location, what you'll be able to do is talk to owners, people just like you who had probably no business experience, but talk to them about how the support worked, how the back office worked for them, how the marketing suggestions worked, and really help you understand the process, because that's really what it's going to be about. It's going to be about the right location, like Tony talked about, and then a proven model, which you can prove out through the FDD and validation, and then it's what you can do. So here's another question: do you need to get business credit, or are you looking at personal credit? How much do you take into account one's personal real estate as collateral? Okay, 2 questions. Portia's going to get me. Let's start with the credit one. Are we looking for, so this would be more like Jim, Linwood, and Portia. Do you need to get business credit, or are you looking at personal credit?
Personal credit. Personal credit would be the first thing that we would look at. And as Portia said before, all lenders are there's different lenders that are gonna look at personal credit and where the number needs to be through a different lens. I mean, from our perspective as a traditional bank, it does matter. And I think I can say safely for most big banks, most big lending institutions, personal credit matters. And I think the other thing is it's tough to mitigate. It's tough to mitigate if it's low, right? It is sort of what it is. Linwood made a good point earlier. I think some are more willing to listen to the story. Maybe there was a medical issue, death in the family or something like that. And certain lenders will be more open to that. But I would say from a big bank perspective, it's pretty important.
Yeah, I would just chime in and say, Jim, you're right. I think whether you're a traditional lender or non-traditional lender, I think credit does matter, but I don't think it's the total story.
Right.
That's the way I would answer that. Okay.
And I would chime in on business credit. So business credit, for the most part, what we see with our lenders, right, it's not needed. But if you do have business credit, it can help your file. But if you have bad business credit, that can also hurt your file.
There you go. Thank you, panelists. So the next question is, how much do you take into account one's personal real estate as collateral? One of the C's.
I think it's going to depend on the nature of the transaction. If you think of a franchise from a bank's perspective, we make a loan, and God forbid the loan ever went bad. The bank would then say, okay, we're going to lean on our collateral, right? If you can't pay us, we're going to go back and take the assets. I think it's a lot of these franchises are service-based startups, And from a bank's perspective, there's not a lot of collateral, right? So if someone does have equity in a home and someone pledges their home, that would give a bank additional comfort that they might not get with the actual transaction itself, right?
And I would chime in as well and say that with SBA loans, for the most part, they want those to be collateralized. Now, if you do not have collateral, if you don't have a personal home, or if you don't have, really just like any other type of collateral, besides business assets, then if your file is strong enough, they will move forward with that, with that loan. However, if, you do have, like, specifically for SBAs, if you do have a home, most of the time they are going to require that as collateral, because that's just what the SBA, bylaws, do require.
Right.
Okay, great.
Yeah, we're required,
Great, Jim.
portion, we're required to take that additional collateral sort of per the SBA SOP. So we have to.
Yeah. Okay, thank you guys. And a question was asked regarding CDFIs, and Linwood, thanks for the answer. It was, what type of franchises do CDFIs fund? Well, being on both sides, being on the funding side and being on the franchisor side, let me make that question a little bit different for, and Jim, I know you'll be able to answer this, and maybe Linwood as well. So there's some 4,000 franchises out there, and they range with all types of things. Some do things like check cashing, and some do things like cannabis. Some do things. Now, are you guys saying we'll fund anything out there, or are there limits? I think that's what the questioner was asking.
No. I within the norm of the industry, right? And so one, we wouldn't fund. I don't think most of them would fund payday lenders, right?
Right.
Check cashing, those kinds of things. It is within the norm of what you would expect that would be aligned with a mission lenders' values. And I think it's reflected in the franchise.
Yeah, I think from, we're obviously going to have prohibited industries as well, check cashing, cannabis, things of that nature. We can't touch. To answer your question, because it's a franchise, when we do it, not necessarily, we're going to want to know how does that particular franchise brand perform, right? If it's a known commodity with a long track record, right, that's going to help a lot. Are the franchisees staying in business, or are they going out of business? How does the franchisor help the franchisee, right? So when things get a little bit tough, what's the track record, right? Those things all weigh into how we.
Okay. You went on mute, Jim, but we got it. Thank you very much. And so I wanted to just make sure we clarified the answer to that question. So you see, there are limits. And you know what, if you look in the chat, Ricky put two great resources in there. One for franchises that have better incentives covering all types of businesses. So go in and look at that. It's www.franbed.org. And then for a broader list of franchise opportunities, she put another link in there, which is franchise.org/franchise-opportunities. You can get those right out of the chat. Thanks for posting that, Ricky. And then Portia, this question is directly to you. And I know it could be a whole lot of answers to this, but I'll ask it anyway. What's the fee to working with Brooks Finance?
It's actually pretty simple. It's between 2 to 5%, just depending on the type of loan product that we do get you. And it's not an upfront fee. So we only collect our fee at the end when you are approved and funded.
Excellent. It was simple. Thank you. Somebody asked the question about wanting to know how to find part 1 of this series. It's actually in the chat. Thanks for putting that in there, Ashley. You can click on that and that'll get you to part 1 that you heard Ricky mention. And then someone wanted to know a little bit more about self-esteem brands and Tony's organization. There was just a great article in Black Enterprise about that. The link is in there for you. Let's see, what other questions do we have here? I'm trying, am I missing any here?
Jack, I did want to flag one that just came in from Emanuela. For Tony, how did you decide to go into the self-esteem franchise category? What decisions were you considering?
Yeah, no, yeah, that's great. I wanted more. And I grew up with very, very humble background, and I didn't have a lot of folks in my personal network that were successful and that had money and owned businesses, and so when I finished with undergrad, I was curious. I knew that I wanted to start something, and I strictly, and I've always done it this way. I like passive income, so I love the idea of partnering with a brand. And there's a lot, I don't mention this. There are a lot of brands out there. There's never been more franchising opportunities out there for folks to tap into. So there's a lot out there, but do your homework, vet it, look at their track record. I personally like to partner with someone that's got shared resources and services and a very, very low failure rate. So I'm happy to say that with Self-Esteem Brands, initially with Anytime Fitness, now across all of our brands, we've got a failure rate of less than 2%. So there was a stat that came out recently, post-COVID, about failure rates, and I think the new updated SBA failure rate, and I could be slightly off, but it was 50% of businesses fail after 5 years, right? So you want to partner with the brand where you've got a shot at being successful, making some good, solid income. Do you want to be an owner operator? Are you looking for more passive income? And so we end up choosing Anytime Fitness because at the time, red hot, we've had such a huge growth pattern. But again, having for us the ability to, as Jack mentioned earlier, create a legacy, experience passive income every year, but then also now creating equity in a business that down the line, if we decide to sell, typically we'll value our businesses from a starting point at 3 to 3.5 EBITDA. So anyways, hopefully that helps.
Yes, thank you very much, Tony, and thanks, David. For opportunities like that and franchisors like Tony and Self-Esteem Brands, they're out there. The IFA is bringing them to us on a platter, and they are actually bringing us to them on a platter to get to a point where we can see, does it work? And in fact, I'm with a collaboration that actually provides information on firms like that, like SEB, that really is looking to expand their minority profile. It's Tony mentioned it. It's the J3 collaboration. You'll see that if you look at my profile on LinkedIn. Ashley, I want to thank you very much for helping with the chat here. I want to thank our panelists. I really appreciate all of your insight. Thank you, audience, for the wonderful questions we had today. At this point, we're going to turn this back over to the IFA Foundation Executive Director, Ricky Amos. Ricky, it's yours.
Jack, let me say what a great job you did.
Yeah, I agree.
Give me 1 second. Sorry, I'm like.
Thank you.
Thank you, Jack. Really.
I concur, Jack. You are a fantastic moderator. So we're so appreciative, wow, for this entire group in sharing your insights today. The team and I were texting and chatting among each other, even while everybody was live, that we could go with this conversation and topic for hours and barely scratch the surface. So I am so appreciative of all of the amazing content and direction that was provided to us today. I encourage everybody, please share this recording as we post it with others. We know there's a strong network and community among potential business owners and current business owners who are supporting each other along their journey. And keep up and come back with us for our future programming and content so that we can keep this discussion. Lenwood, thank you for bringing the CDFI story to life and talking about that. We are increasingly passionate about that and educating both our brands who aren't familiar with it and talking with others and bringing that in. Portia, your perspective and talking about alternative capital and educating us on that. Jim and Key Bank. Key Bank has been so supportive of Diversity Institute. We appreciate you all being here to talk about the bank perspective. you know, Jack, you remain an amazing moderator. My dog is jumping in on the conversation here as well. And Tony, we're so very appreciative of your comments and self-esteem brands. It is a member that we hold in high regard. We appreciate how much that you all support us. And I was happy to hear your conversation about basically IFA is looking to serve as a convener. We want to bring everybody together to learn more about how we can all work together to advance this. And since my multi-poo has a lot to say about this conversation, I will probably keep my final remarks here closed. We will follow up with information. We will follow up with this recording. We are going to keep these conversations going in the educational content. So bring more to the table and additional folks so that we can all keep working on this together. Eric, thank you for giving us an overview of VetFriend. David, for all of the work that you're doing to drive Diversity Institute forward. And Ashley, thank you for making all the trains run on time and us show up here together. Jack, again, you're an amazing moderator. Thank you for representing our Black Franchise Leadership Council, our Access to Capital Committee, and the Diversity Institute. I look forward to keeping this conversation going with each and every one of you. So everybody have a wonderful afternoon. Thank you so much.
Thank you all.